My overall business strategy is occupancy. I want to operate on 90 to 95% occupancy. I feel like volume equals value.
This is episode number 34 of the Short-Term Rental Success Stories podcast. Are you an investor that's looking to have your home professionally managed? Go to cohostit.com for more information. Welcome back to Short-Term Rental Success Stories. I'm your host, Julian Sage. This is a show where I talk to hosts about their journeys in starting and growing their short-term rental business. My goal is that you'll be able to walk away with practical information that'll help you become a better host and learn how to scale your business. Like any exceptional host, we all strive for 5-star reviews, so please go on over to iTunes and let us know what you enjoy, as it really helps support the show. If you haven't done so already, go on over to our Facebook group, The Host Nation, to connect with the community. Hey, what is going on, Host Nation? I am super excited because of a couple things. One, because of our awesome guest today, but I'm really excited because we have officially just become the #1 short-term rental podcast on iTunes. That is so cool. In 33 weeks, because we got it by the last episode, just after the last episode released, we made it to #1. But 33 weeks, 33 episodes, and now we are the #1 short-term rental podcast. That is just so cool. I am so honored and so proud of the community that we've been able to build up. The Host Nation just keeps on getting bigger and better. I love the Host family so much, and we're just doing so many cool things. I love talking to every single host on this show and talking to the people in the community and educating people. It's just so exciting and so fun. And then just the amount of possibilities that I never would have thought of, now having a property management company doing turnkey arbitrage properties, which is really cool. And if you are interested in learning more about our turnkey arbitrage program, then go to cohostit. That's cohostit.com, cohostit.com. And you can find out more about our management and our arbitrage program. It's just so cool. The B&B Empires Builders Mastermind group, that is just I love the Host family and I love our community, but I can't help everybody. And the people that want to be helped and really want to grow are in this group. And that's really who we want in this group, is people that are looking to grow and really serious people. And I know all of you guys are serious. If you're listening to me just talk for an hour with other people, then I know you're serious, but these are the people that are looking to grow themselves and increase their management, increase their clients, take on more rental arbitrage properties. It's just so cool. So I'm just super proud. I'm super honored. I'm humbled. Thank you so much, everybody. So now what's next with the show? Now that we've reached this huge milestone, I would love to just know more about what you all are looking for, because I'm trying to provide as much value as I can to you guys. And I would love, in the Host Nation Facebook group, send me an email, whichever way, Instagram, YouTube, whatever it is. Let me know what it is that you're looking for and how we can best serve you, because I want to try to provide as much value as I can. I am all in this for you guys to be able to give you exactly what it is that you're looking for. But we're going to keep on rolling out with awesome interviews. I'm going to try to pick people's brains even further. I don't even know if that's possible, because I have a pretty good talent of just really diving into people, but I'm going to try to just scoop out as much golden information and try to provide that to you as much as humanly possible. So I need more humans is one thing. I need more people helping me, but I am going to just try to provide as much value so that you guys can become the best host that you can. And I would love to be able to have you all on the Short-Term Rental Success Stories podcast, because that's really what this is all about. This is about becoming your own success. If success means for you having 1 property, having 10, having 100, starting your own management company, being financially free, whatever success is to you, that is what I really would want you to be able to strive for. And that's what, through the show, I hope everybody can achieve that level of success. And speaking of success, today I had the special honor of speaking with Anuj Datta. Anuj, prior to jumping into short-term rental investing, owned various franchises such as gas stations, a Subway, and a Checkers. If you don't know what Checkers is, it's kind of like a Burger King. It's they offer shakes and kind of like a Shake Shack, I guess. Because of the overhead costs in the business, Anuj decided to sell off all of his businesses and move to Houston to jump headfirst into real estate without prior having any real estate experience, just jumping in and getting into the short-term rental game. Anuj now has 10 listings that he owns himself. 3 of those are shipping containers that he's turned into these beautiful and very unique tiny homes. He's currently growing his management company and taking on more clients, so he's going all into the short-term rental game. Anuj talks about how his background in business helped him start his short-term rental business and how it got him being able to go so smoothly. We talk about a lot of the similarities and differences between franchise management and ownership and short-term renting. And if he could go back and do it all over, which one would he do initially? He also shares his ideas of converting a shipping container to a short-term rental property and what are the challenges that has brought on and what did he do to make his stand out from everybody else's. If you like my show notes for this episode, go to shorttermsage.com/STR34. Or if you like my show notes sent directly to your inbox every week, then go to shorttermsage.com/show notes. Last little note is that the B&B Empire Builders Mastermind is going to be closing its doors very, very shortly, guys. So if you are interested, go to vacationrentalmachine.com or just go to the store on the Short-Term Sage. Fill out an application. If you are interested, we are going to be closing this off very soon. We are limiting this to our early adopters. So that allows us to be able to work with you a little bit more one-on-one with John and I. We're going to be doing a kickoff call. Actually, today is when we're going to be doing our kickoff call. So we're really excited to be able to start helping people grow their portfolios. But we are limiting this to just our early adopters that we can help really just figure out how we can provide the most value to you guys. So if you are interested, again, go to vacationrentalmachine.com or go to the store on Short-Term Sage and fill out an application and join before we close off the doors. So with all that being said, on to this week's conversation. Hey, welcome back, host. Today, I have the special honor of speaking with Anuj Datta. Anuj, would you please introduce yourself? Let the host nation know who you are and what inspired you to get into short-term rentals.
Hi, guys. My name is Anuj. I'm originally from New York. Now I operate my businesses out of Houston, Texas. I have 10 listings that I own myself, and I have one listing under management. I'm currently growing my management company to take on more clients. And I come from a business background. I've come from gas station, Subway franchises, Checkers franchises. When I was in New York, I ran those businesses. I decided a few years ago to sell off my assets and move to New York, Texas, to get into the real estate world. And I purchased an apartment complex. And when my first lease was up, I didn't renew it, and I converted into Airbnb. And actually, there's a story behind my first Airbnb unit. It's that the tenant had the place immaculate. It was like beautifully furnished. It was great. I saw it and I was like, this is good to go. We could just list this right away. So all I had to do was make a deal with him for his existing furniture, which was great for him because he didn't want to move anything. And I made a deal for $1,000 on his existing furniture. I added a couple of beds and a TV, and I had the listing going. And so my first experience was great because it was a kind of low cost way to get in. And we started the listing. I saw the revenue opportunity, kind of started learning the business right away. And I saw the next path forward, basically.
So you came to Houston, purchased that apartment complex with the intent to long-term rent it?
Yeah. I was actually within the apartment complex. I had one kind of storage space, which I was going to convert to Airbnb and try it. But actually, the first rental came up, the first lease came up. So rather than renewing that lease, I made a deal to buy the existing furniture that the tenant had, and just and I converted that to an Airbnb unit. And as I saw that happen and saw the revenue come in and how it worked, how the business operated, it was a no-brainer to kind of move everything else over. So I have the apartment complex right now with 10 units. 3 of them are the shipping containers, and the rest are just regular apartment units.
Yeah, I'd love to be able to talk more about the shipping container. You actually shared your video in the Host Nation, and I thought it was just super cool, super original, and man, super cheap too, super affordable. Like that is someplace that I would like to stay if I was in Houston. Definitely right up my alley. I think it was like $29 a night right now. Like wow, what a good deal. But I want to talk a little bit about that more in coming up. But I want to go back to original because you've been hustling, you've been working, you've been a franchise owner. What made you give up that whole franchise life, those businesses, to take on short-term renting and real estate?
Labor. There's a lot of overhead labor, a lot of moving parts when you're running restaurants, when you're running gas stations, 24/7 business. So when I noticed what the overhead costs were and all the coordination with the labor, and it kind of hit me where, I didn't want to deal with so many moving parts when it came to running a franchise, running a restaurant. I had over 50, 60 employees. I wanted to kind of downscale that and then grow back up the right way. And it's harder when you're in the franchise business or gas station business because, well, in the restaurant franchise business, because, you don't have the cream of the crop in the labor pool. You're typically paying minimum wage labor, and that's tough to deal with. There's a lot of turnover. There's a lot of issues. I commend anybody in that business, and a lot of people do really well. But for me, it just wasn't there. It wasn't the labor pool that I liked.
So you owned a gas station. How many gas stations did you own?
I bought and sold a lot. What I did was I actually bought underperforming gas stations, underperforming subways, and I turned those into profitable businesses and then sold those off. So I basically, throughout the 9 years that I was in these businesses, I turned over about 20 businesses. So I had like 10 operating at any given time.
So you owned a Checkers and a Subway, some gas stations. I mean, Anuj, it's pretty interesting because what you're basically doing is you're taking these properties, these businesses that are run down, not performing, and you're adding something to it in order to make them optimal. It's very labor intensive, like you said. But what is it? What is it about taking a business that is maybe run down? And do you find that similarity in like real estate because you purchased a multifamily? Is there similarity in how you're able to take something that is run down and making it, profitable?
Yeah, I mean, if you want to increase revenue, you got to be empathetic, right? You got to realize what the customer needs. So a lot of these underperforming businesses, they just weren't, the previous owners were not thinking about the needs of the customers, the cleanliness of the place. Some of it was low hanging fruit. It was just kind of easy to go in there and do things and implement, the right merchandising and the right customer service, service with a smile and things like that. And we were able to turn those businesses around, and in a short turnaround, a lot of times we flip businesses within like a year or so. So I think it's, in Airbnb or whatever you do, you have to put yourself in the shoes of the person who's going to be paying you, and you got to, see what's good for them, what works for them, and do that. Go towards that, and just bring your service catered towards your clients.
I mean, you've been in the franchise business since 2007, and you first got started with short-term renting in 2017. So that's a 10-year span. What about the franchise? Like, was the franchise business worth the amount of labor that you were getting? Like, was the returns on that like a lot better than maybe short-term renting, or
no? Because the costs are less. So the costs are more in the franchise business. Like I said, when you have a lot of labor to kind of manage, then your labor costs are higher. In New York, you had pretty high rental costs as well. So I see more profitability within the short-term rental space, for myself at least, just because of the efficiency and the way that the operation is being run. On the franchise side, it's, there's definite upside, but your margins, like especially with Subway, for example, your margins are really tight. If you're operating on like 10% revenue, or if you're operating on a profit margin of 10% of revenue, you're in good shape, but you're really on tight profit margins. Same thing in the gas station business, convenience store, depending on the amount of tobacco products you sell, which are usually low margin products, your margins can be tight in that space as well. Gas margins are pretty tight as well. So I definitely see better profit margins in the short-term rental space.
Now, obviously, running a single franchise, such as like a Checkers or, and then a Subway and gas stations, they all operate differently. I'm sure that they all have their unique things to them. What about the business though? Have you been able to take away? Like, what are the big things that you've taken away from running these like big businesses with, a lot of expenses, a lot of employees, all this, and then converting it towards, short-term renting, which is what a lot of just like mom and pop, just your your everyday person is able to up and run.
Yeah. Systems and protocols. There's when you're running a franchise, you have a system in place, right? And that's kind of what you pay for when you're running a franchise. Same thing with gas station inventory controls is something that I've brought over here. Merchandising doesn't really translate that well into the short-term rental space, but merchandising was a big pull for customers. You got to set up the stores in the right way. You gotta and keeping everything clean, keeping everything in order. But the systems the POS machines, all those systems that are in place to kind of keep your inventory together, keep your scheduling together, bringing those kind of systems and implementing them in the short-term rental game has really, done well. And that experience has really translated well into this business.
Now, for your first, long-term rental property, you purchased a apartment complex, and then you subdivided it. Coming all the way from New York to Houston and dealing with this project, how was that in order to get that property to where you wanted it to be, so that you knew that you could start becoming profitable?
Well, I just subdivided the apartment complex last year, so I was running short-term rentals like for 2 years prior to that. Once I saw the upside in the short-term rentals, it made sense to kind of invest and subdivide what I have. So as far as what was the initial question? What is a
How is that process with finding this multifamily? Was it like a turnkey property, or did you have to invest a lot into the development?
Well, initially it was turnkey, but it's an older property, so there was definitely some investment that had to be made within the plumbing, within some of the infrastructure, and then I made investments as far as dividing up the existing units that I had. Initially, I built some, so I had 6 units, which I converted into 8 units within one building. And then I had put another unit into another building that I have right on the same property. And then after all of those units were cash flowing, I decided to build the shipping container units. As far as compared from Houston to New York, Houston's much easier to deal with from like a building permitting standpoint. So with the containers, I had to get full building permits. It's actually classified as a single family house, even though the use that I have it for is like 3 separate units. It's classified as a single family house. And I had to go through the whole permitting process. We had to, run the water meter, run all the plumbing, run all the electric. So it was a full development project.
Now, off of a multifamily, have you found that it's more profitable investing into, let's say, a multifamily than like single family homes? Because I know a lot of people are purchasing single families and turning those into into short-term rentals, but you decided to, because you were originally going the long-term multifamily route and now you're going short-term rental. Have you found it a profitable venture, or would it be easier going single family?
I like the ease of operation with multifamily, because you can, if you're condensed within units within one space, your cleaning people are running across town cleaning different listings. So you save a lot of time, as compared to if you have one listing here and then another listing across town. So, for my future investments, I'm actually going to do exactly what I did, which is purchase kind of small, 5 to 12 unit type of multifamilies and convert them all into short-term rentals.
Now, when you have a multifamily, because you have 10 units now, have you been able to justify being able to have like a full-time cleaner, or are you still contracting that out?
I have a full-time cleaner. They're not my in-house employee. I do contract it out, but that's just the way that it operates on paper. It's kind of like they are my employee. But the system that I like is that I don't have to deal with hiring several different employees and deal with giving people time off and things like that. I have it contracted out to one person, and that person coordinates all the different cleaners that got to come in and do the cleaning on a daily basis. It kind of takes that off my plate so I can focus on other things.
So you're able to pay your cleaners a minimum, the minimum wage, rather than a contract price. And
No,
they're basically
I pay somewhat of a premium, because I feel like you kind of get what you pay for. So I pay somewhat of a premium for the cleaners. But my system is set up is I pay a fixed rate. So I have a fixed rate that I pay on a weekly basis, and no matter if the person has to clean 10 units or they have to clean 1 unit. So, it works out for them as well, and it keeps me kind of right in control of my costs. So I know, so my labor is more or less just a fixed rate cost.
And what have you done to, encourage them to want to keep working with you? If they know like this week it's going to be pretty easy, but next week it's going to be hard, what keeps them from saying like, okay, well, deuces, I'm out of here, or anything like that?
I mean, I maybe I got lucky with the person that I'm dealing with, and they just do a great job. I pay them well. It's a consistent income for them, and it kind of works out well.
Okay, great. Now I wanted to get into the shipping containers, because if you haven't seen Anuj's shipping containers, I highly encourage you. In the video description, you can go to the show notes page, check out his listings, and then in the Host Nation Facebook group, he also shared the video. I'll include that in the show notes as well. But it is very unique, very cool. What inspired you to start that and create that? Because that I'm at how it looks and how it's set up, it looks very complex, and looks like it took a lot of time, a lot of effort, a lot of energy into that.
Yeah, well, the inspiration was I like the idea of repurposed use. Initially it was used for one thing, and then we converted it into something else, and it has a completely different use. You can even translate that to people, right? Like, we all have kind of a purpose on the planet to do something, to fulfill our dreams, follow our desires and make our goals happen. Sometimes in life, you lose that initial purpose. You kind of forget, you get sidetracked, there's so many things that go on, but you can always find your repurpose. And that was the inspiration, just the repurposed use of it. Giving people something unique, something different, just like a different experience that I think people enjoy.
No, and I think it's really cool, and I love in the video there. I think one of the highlights is like on the side of the building. It says like, what is it? Does it actually say like repurposed or something like that?
Yeah, it says find your repurpose.
Find your repurpose.
Yeah. So in case you get lost, find it.
So. Just to kind of maybe walk people through that haven't seen the video, do you mind kind of walking through how the structure is of the container homes?
Sure. So these are 3 8x20 shipping containers. So this is tiny spaces. There's one shipping container on the bottom, and then 2 cantilevered on top of the one on the bottom. We have a little kind of barbecue area. We have a deck in the middle of the 2 shipping containers on the top, and we have a hammock in the middle. And we have patios for each one, a little sitting area and patios, because since we have such small interior space, we wanted to use exterior space so people can kind of have the best of both worlds, where you can be obviously in a nice luxurious kind of interior, small interior, but also you can hang out outside as well and just have a space that kind of flows together and is conducive. So the kind of idea behind it is micro luxury. So even though it's a small space, we put all high end finish. We put high end finishes in there, high end tile work, frameless glass shower doors, just to give people, when you see a shipping container, you don't expect something kind of beautiful, something high end with high end finishes. So we just decided to go with the micro luxury concept.
Now, I mean, it is very unique and very like it just pops and it stands out. But the prices that you're listing on it, like I saw, it was like $29. Is that that seems very affordable? Have you found that because of how affordable it is that you haven't been able to get people that maybe appreciate that and are just looking for a cheap place to stay, or what's the reasoning behind the fee?
So I just put these on the market last month. So I wanted to get some kind of traction in, get the reviews in, and kind of get the exposure going. I definitely have some upside that I can take, But my overall business strategy is occupancy. I want to operate on 90 to 95% occupancy. I feel like volume equals value. So if I can stay occupied and my business stays consistent, I think in the long run, that's going to be better. So I kind of suit my pricing according to having the maximum amount of occupancy for my spaces. Now, that $29, $30 also does not include the cleaning fee. So I don't like to have long-term stays. I like to have just quick in and out, 1 day, 2 day, 3 day stays, kind of like a hotel. And so the actual average daily rate that comes in on those containers now, just a month in, having a little bit of data, is like $50 to $60 a night. So that's the actual average that's coming in.
Now, with a project like that, I imagine that it was very maybe cost intensive. Is your return on that? How soon would you be able to get your return on a work like that?
My ROI is looking like 3 to 4 years. So if I'm operating on a 25 to 30% return, I'm happy with that on the development side.
Okay. And what about the apartment complex? What's the ROI on that one?
The ROI on the apartment complexes, since I've converted and made it, I basically returned maybe 3/4 of the money on it.
Wow.
So yeah, and that was 3 years ago. So
that is awesome.
It's quick. STR, because when you have a lot of units in one space, and all my spaces are either studios or 1-bedrooms, you can work on economies of scale. So you can, if I want to do the volume, I know I got to charge a little bit less in the market, but as long as I can retain my occupancy, I can always adjust my pricing. And the pricing, it's always kind of different depending on what the market is offering and what I can get, but it's just about achieving the occupancy that I want to achieve.
Does a container home does it have like the same like type of like equity as like a single family home? How does that work?
So it's an investment property, right? So equity will work based off of income. So your value, because this is not for the purpose of selling to somebody as like a single family family who's going to live there, because it's just not set up that way. So if I wanted to sell it or refinance it, then they're going to evaluate this place based on the income that it produces. So for me, it's actually a very good equity play because because the cash flow is so good,
Great. And what has been the most challenging part of starting your short-term rental business?
The design part. I do my own designs. Like I have one space which is like a Rubik's room. So I painted it all like it's called the Rubik's Studio, and it's like basically a Rubik's cube. So you're living in there. So my whole thing is I want to give a different design and a different flavor for every single space that I have, and that's what we've been able to achieve. But that's you got to be creative. You got to try to think outside of the box, and that can be a challenge at times. But I guess that would be challenging. I don't know if challenging is the right word, but that'd be the most interesting part of the business for sure.
Yeah, going back to the design concept, I don't how did you even find the right person that would be able to create this vision of yours for this container home?
Well, I looked around. I knew I wanted to do something out of containers, right? Initially going into it. Then I shopped around for architects, and I found an architect who can make it happen. And then they put together plans, and I gave my approval, and then we went to building. I actually GC'd the project, and I subbed everything out to different people. But so yeah, I just did some research and found the right architect, and we made it happen. Okay,
so you're actually a contractor in the Houston area?
Only for myself. I don't do any jobs for anybody else.
Okay, I'm sure that a lot of ears perked up, and they're like, a reliable contractor that can do work. It's like,
yeah. I haven't ventured to work for anybody else. I don't know, maybe down the line, but it just haven't thought about it.
What has been the most challenging part of scaling this business?
The most challenging part about scaling this business, initially, it was about the consistency of the cleaning. Until about a year and a half ago is when I found the cleaner that I have and that I deal with, which has really made life much easier. But prior to that, I was not able to find a consistent cleaner. I had some theft issues with some inventory, and that was the most kind of challenging part, getting the consistent cleaner in place. Once I had that, then I knew that this business can be scaled. So that's what I think is definitely one of the most challenging parts, getting the right cleaner in place. And you can always pay somebody, $12 an hour or whatever to do your cleaning, but you have the issues with the turnover, you have the issues of, are they doing the right job, and like, how involved do you want to be in that part of your business? If you can find somebody reliable, consistent, they do the right work, and then you can focus on growing and scaling your business, it really alleviates the kind of day-to-day type of operations.
Yeah, coming from a guy, Anuj, that has dealt with just so many people that you have had to hire and turn over, what have you found to be most successful when screening and hiring cleaners for your business?
Reliability and trustworthiness. You have to be able. You can track your inventory. Your supplies. You can always track that. But at the end of the day, you got to be able to trust the person working for you, and they got to show up to work. They have to be reliable. So the system that I have set up, like I said, a third party contracted out my cleaning, but it's a 24/7, 365 contract. So I never have to, I just have to communicate what has to be clean. And actually, I'm going to automate all that. I have already, but I've been having problems with my Google Calendar, but that's besides the point. Anyway, where they just come in, they do the work, and they go, and everything's just kind of automated. Take that off my plate, basically.
Do you have a system in place for finding the right people for the job?
Craigslist. I used that. That's how I got successful. Initially, I was just talking to local people. When I was running businesses, what I did was have job fairs. So when I had to hire a big pool of labor, I had job fairs. I set it up. I marketed in the local neighborhoods, and I had people just come in and just rather than little by little, because let's say I opened up a Checkers in Queens, New York in 2013. I needed to hire like 40 to 50 people, between part-timers, full-timers, management, this and that. So the most effective way was to have a job fair, have it set up, and then just interview people on the spot and just kind of almost hire right away.
And how do you, if let's say you're meeting with a cleaner, you're meeting someone that you don't know, and you, like you said, you have to find that reliability and that trust. How do you do that if you need to just start getting your business up and running right away?
Some of it's trial and error, man. You're not gonna know if somebody's reliable. They can tell you that they're reliable, but you're not gonna really know until you put them in place and get them into the business. So when I put my ad out, basically for the person, for the company that I have now, that was what I, specifically stated, reliability and trustworthiness. Those were the two words that I used. And luckily I just got the right people in for the cleaning. But, prior to that, it was inconsistent with my cleaning. Actually, my reviews were at like 84% 5-star. Then when I got the new cleaners in, now I'm about 92% 5-star. So, all that stuff in the long run pays off.
And what have you found most successful when you do find that person that is reliable and trustworthy? How do you retain that person and want them to, and get them to keep wanting to work with you?
You pay them more than the bottom level, right? And it's just human nature. You just treat everybody with respect. And if they can see, if somebody's working with you can see that, hey, there's some upside in this, and there's a long-term play. Because for me, it's all about long-term. When I build a business relationship, I want to have it there for a long time, because I don't want to be running around looking for people to work or people to deal with. So as long as you can make them realize, listen, there's a long-term play here with you and with me, and there's a long-term vision here where we can grow together. That's really a big thing. Like for the cleaner that I have now, I'm actually even thinking about partnering with them in a management deal for a short-term rental, just so they have some more um, upside for themselves, because she was saying, I can't be a cleaner forever. I want to do different things. Well, come on, why don't we work on something together? And you come up, and we can work together for the long run. Definitely long term thinking rather than like short term plays. I would say long term thinking is the right way to go.
No, and that's awesome. The allowing your cleaner the potential to move up. But is that a conversation that you bring up once they've been there for a while, or is that do you use that to kind of maybe entice them to work with you?
No, that's not an enticement. That's somebody I know that I could work with. That's somebody, people who've been with me for a while. Even when I was in the franchising game, I had, managers that I brought up into partnership, made them junior partners. And it's actually easier to run that way, because then if you have a partner who's working there and running it on a day-to-day basis, you can focus on the bigger picture. So I like doing that, and it helps everybody out. It's somebody who's just coming in and making a certain limited amount of money just based on their time. If they can come in, bootstrap themselves, and do the right thing, then they can move up, and that's what it's all about, coming up together.
Very cool. Yeah, I love that mindset that you have, because really, that shows with how you treat people and how you've kind of scaled up the business, the franchise mindset of how you've been able to apply what you've learned, through franchising towards your business and how you treat your employees.
Yeah. It's all about putting yourself in somebody else's shoes. Empathy is a big thing. If you're always just kind of selfish, looking out for yourself, there's definitely a space for the bottom line and the bottom dollar and making the profit. Without a doubt, we're in business. That's what we're here for. But if you can do it and bring other people up with you and be considerate and be empathetic towards their needs and what can help their families, then I think everybody growing together you can move mountains, with multiple people.
And is there anything in your units that saves you time and money?
I mean, I don't know if I have anything different than anybody else as far as that saves me time and money. I mean, I have a pretty, it's systematic. It's kind of like, okay, these units have to be cleaned today. Okay, these the access codes have to be changed today. Like, I know a lot of people use access codes on their phones and things like that, and people have to download apps to access different Airbnb listings. What I do is kind of automated, where the cleaner knows. I use the last four digits of somebody's phone number. So if the code, the last four is digits of somebody's phone number, in between every cleaning, we just change that code every time. That gives us safety. That gives us security. So just like kind of things like that, where it's, I wouldn't say fully automated, but it's semi-automated. So just those systems and the calendar sharing, where somebody can just see your calendar, where the cleaner can just see your calendar and just look at it. You don't even need to communicate kind of what's going on. They know exactly what to do, and you have no issues, with misunderstanding or anything like that. I think that was a good thing.
And with the franchise type of mindset, do you have a way that you are kind of already analyzing how you can maybe scale this up? Is there something that you've kind of taken away from your previous experience that is making you look at the real estate hospitality side a little bit differently?
You need to pay attention to your numbers. That's a really important thing. You need to pay attention to the revenue coming in. You need to pay attention to your labor costs. You need to pay attention to your supply costs. The way that you look at it in the restaurant business, in the franchising business, is you have a total amount of revenue. Now, what percentage of that revenue is your labor cost? What percentage of that revenue is your supplies cost, is your product cost? What percentage of that revenue is your utility cost? What percentage is your rental cost? So you have your pie, and you say, okay, what are my costs out of this pie, and then what is my net return at the end of the day based on the revenue that I'm doing? So that's kind of the approach that I've taken with this business as well. See what the revenue is. Try to make that pie obviously as big as possible, and then slice down your expenses. And then once you have an idea and you can see what those are, you can see, hey, where can I save money? Where can I make the profit side of this pie bigger?
And does it make more sense to you to keep on replicating the same type of format that you have, or diversify into different types of investments?
Diversifying So for me, I'm working on the management end of my business. I'm also working on the arbitrage end of the business, and then but my for my real estate investment side, I want to do the same exact thing on my next purchase, which is going to be taking a smaller apartment complex and converting them into Airbnb units. So on the real estate investment side, I want to do that, but definitely I have the management going and the arbitrage I'm getting going as well.
Awesome. And
so is diversify. I like to have. I want to have different types of assets. I'm not really big in the single family. I'd rather stick with the multifamily.
Okay, and why is that? Just because of the ease of all the units together, or?
Exactly, ease of operation, economies of scale. Those are the two main things.
Okay, and for what have you done to be able to help your guests leave positive reviews?
Hospitality is something that I was raised with. I was, I come from Indian. That's my background. And Indian people are just raised if you have guests coming into your house, you just treat your guest as your God, basically, is what the saying is. So, and you treat them with that respect. You make sure that everything is taken care of for them. Initially, I didn't have too many amenities like coffee, all these, and little by little, I started adding a lot of different amenities because it's just like putting yourself in somebody else's shoes. So one of the things that was actually a game changer for me as far as hospitality goes was I put in 5-gallon water coolers in all my units. So if somebody walks in, they have fresh water. They don't got to worry about a water tap. They don't got to buy water bottles. I was noticing that people would come in and they would leave they'd buy 24-pack of water and they have 20 water bottles left because they can't take it back with them wherever they're going. And that's probably annoying. You walk into a place and you're like, damn, I need water. And you got to go to the grocery store. You got to go buy the water and then you're not even going to finish the whole thing. Well, so then taking that into account, I just said, hey, why not? So we put 5-gallon water coolers in every single unit. And that actually was a game changer for me. People love that. They love that amenity.
So just recognizing that what people are requesting just from their actions, you've been able to modify your business to basically fulfill that. And
paying attention to the reviews, what are people telling you about your business? Taking their feedback, don't get defensive about it. Don't think, oh, this person doesn't know what they're talking about or this and that. No, just say, hey, this is what's good for my business. So, and the point is with small things such as water and coffee and what else? I mean, those are two main things that come to mind now. But with those type of small things, they're really small investments, but they bring you great reviews and returns. One of my big things in STR is exceed the expectation, under promise, over deliver. So and that even works with pricing. So if somebody's coming in at a value price, they're going to come in and say, wow, I paid this much. And look at all of this that's coming from you. Now, what is that going to translate into? It's going to translate into great reviews. And that's what this game is about. If you want to be consistent in the STR game, you got to have great reviews.
And is there one house rule that has maybe saved you before?
Quiet hours. Initially, I had no really house rules. Quiet hours after 10 p.m. One thing about house rules is you got to be very straight up. You cannot be unclear. You have to be very clear about what your house rules are, what your guests' expectations are, and because we've all dealt with parties. If you're in this business, you've definitely dealt with parties. But if you can, from the pre-booking phase, weed out the people who want to do parties and not obey house rules, then that's a much easier way to run the business.
Yeah, and I can't imagine, because I think you're one of the first guests that is actually renting out a full apartment complex for the intent just to short-term rent it. A lot of people that are in the rental arbitrage space, they maybe rent out a unit out of maybe a few, but your whole apartment is short-term renting. Have you found what has that been like, dealing with or managing a property that is just solely short-term rental with multiple people side by side?
It's good. I mean, at the end of the day, it's kind of like a little hotel, So it's been good. So short-term rental is a business. So you have the business aspect of it, and then you have the real estate investment aspect of it. So it's like two different things. So in essence, out of one asset, you have two. You have a business asset, you have an operating business, which is bringing you cash flow and income, but you also have the land and the structure, which is your hard asset. So I love it because it's like double value. If I wanted to, I have a successful STR business, if I want to go ahead and just sell the business and retain myself as a landlord and just get a fixed rent from somebody who just wants to do rental arbitrage, that's an option that's available to me. And I'm thinking maybe down the line I would do something like that once I grow a couple more apartment complexes. That way you can sell your actual business for some money, and obviously it'll be a running, furnished, fully running business for somebody to come into, and you would obviously work out all the terms as far as what the rent is, and that would correlate with what the selling price is of the business, and it could be a win-win for everybody.
Yeah, I think the ideal situation. Everybody wants to get into multifamily. That's what people really want. But it is also very challenging to maybe find those properties because everybody already wants those, and people are willing to spend a lot of money on those properties. Have you, with the property that you purchased, were you willing to just pay top dollar because it was a turnkey property, or how does really someone get into a position where they are able to find that multifamily and be able to short-term rent it?
Well, what you're not going to buy a multifamily property basis on the cash flow of a short-term rental, because then you'd be way overpaying for it. Because the way the multifamily properties are calculated is something called a cap rate, which is basically your profit. It's your net operating income after all expenses. So, for example, if somebody's, and just for easy numbers, if somebody's buying $100,000 property, multifamily, and it's netting them $10,000 annually, then you're working on a 10% cap rate. So when you're looking to buy a multifamily, on my next one, I'm not going to be looking to talk to the seller and say, hey, I can make this much money off of Airbnb, and give me the price based on that. No, you're going to analyze it based on the income that's coming in and what the net return is on that income, and then make a deal based on that. You got to be, I guess, a little bit more educated on it when you're in multifamily. I'm also a real estate agent as well. I've been in the real estate game for a while. So if you got to analyze the numbers, you got to analyze the expenses that are coming in, and you don't do it based off short term, because that's your potential. You don't pay for your own potential. You pay for existing as is. What is the business bringing me right now? What is the net income, and what's my return based on that? So a cap rate. Back to cap rate. A cap rate is your rate of return, but it's also an assessment of risk. So if you're buying a property at like a 12 cap that's returning you 12% in like any given market, that's going to be a higher risk, kind of lower end property where your turnover on tenants is not going to be you won't have the best tenancy in place. Whereas if you're buying like something at a 5% return, you should, theoretically, you should have better tenancy. You shouldn't have as many issues because you're buying it at a lower rate of return. There's an inherent risk in the higher cap rate. So the higher cap rate that somebody's buying at, the more inherent risk is in the asset. And you as a buyer, is your job to analyze and find out what is that inherent risk. Like, why is this deal so good? What's going on here? The guy next door is selling it at double the price. Why is this deal so good? So, these are the things that you got to kind of analyze.
So when you purchase this property, you went in there with the intent to long-term rent it, but then you converted to short-term rentals. Would your cap rate maybe change? Would you allow maybe a higher cap rate now, knowing that you are going to be short-term renting it and the returns on that is going to be significantly more than a traditional long-term rental?
I could do my own analysis, but I would never bring that into a deal negotiation, because if I'm buying something that's long-term rented, and they're marketing that property at a certain cap rate, I'm not going to say that, hey, I can come in here and double your cash. I can come here and double cash flow, because that's my own potential. That's what I'm going to be bringing to this property. That person wasn't able to do it. The seller wasn't able to do it, and that's why they're selling it at a certain rate. So I wouldn't bring that into a negotiation. I would only base it off what the long term market gives me. Because at the end of the day, you need to take that into consideration. Anything can happen in the STR world. We know it's always changing with regulations and just different things happening. Airbnb is going to go public next year. Who knows what's going to happen with their fees and their rates? It may not be as profitable as it is now. I mean, we're only getting charged 3 to 5% as most at this point. So.
Right, but I'm asking you, when you're analyzing a property, would you, now knowing that you can get a much greater return on a short-term rental, would your flexibility for maybe a higher cap rate where the maybe people are looking at this as maybe not as good of a property to invest in? Are you going in there with a different mindset now?
Yeah,
maybe.
Yeah, because I want vacancy. Right, a lot of people, they don't want vacancy, but if you're going to do STR, you want vacancy, so you can make a better deal on something that is vacant. That has some vacancy in
place. So you're saying that because you now know that short-term renting has such higher returns on investment, that you're willing to work with a property that maybe has a higher cap rate, where other investors might look at that and say, oh, no way, I wouldn't touch that with a 10-foot pole. To you, now you're looking at this, well, I might actually be able to use the returns on this for short-term renting, fix the property up, and then get it to, if I do have to long-term rent it, a lower cap rate.
But I wouldn't buy based. What I would look for is a deal, right? So I would look for, if somebody wants a long term rent something, right, and they want to buy an asset and they just want to hold it in place and have the renters in place and buy it on a 5 or 6 cap. That's fine. I'd be looking for the deal that is actually a lower cap rate, but that has vacancy in place. So a higher cap rate, not a lower cap rate, but a higher cap rate, but which has vacancy, so that you can just get in there and you can turn those into short-term rental units. I'm looking for the best deal possible. So the best deal possible is going to give us most likely a higher cap rate, and you get in there and then you can just cash flow.
Now, multifamilies, they can be, they are a bit more expensive, and a lot of people might have to go with like a hard money lender. When you are working with someone that is going to be upfronting you the cash, are you, I don't know how you structured your deal if you just purchased it with cash, but if you are going to pitch to a hard money lender and they're going to be analyzing that deal for you, are you talking with them about the potential of short-term rental and how that could impact, or does it strictly have to be off of the traditional long-term side?
I haven't really worked too much with hard money lenders, but if you go with a bank, so what I've done is use my own cash, purchase what I purchase, and then refinance and just pull out equity. So what's great with the bank is that when you're cash flowing on the short-term rental side, they're gonna evaluate your property at a higher level. So you can essentially pull out more equity than if you just had long-term leases in place and you're making less revenue altogether. So it actually works out better on the refinance side. If you're going to work with a hard money lender, or if you're going to work with any lender, they want a pro forma, right? Because they're going to say, okay, well, what are you going to do with the place? They're going to want a pro forma. So of course you're gonna show them, hey, this is what I can do as far as revenue goes, and how much I can produce with this place. So yeah, you want to show lenders as much revenue as possible. If a lender can say, hey, this is the existing, this is what's coming in now, I'm only going to lend to you based on this. I don't know what your upside is. I don't believe you on your upside or something like that. But but you would definitely want to pitch your higher revenue to a lender for sure.
So you think it's easier for investors to be able to get into the multifamily space now with short-term renting being more common, more well-known than it was previous?
Is it easier? Man, every deal is different, right? So is it? If you have that game plan in place, if you say, hey, I'm going to buy this place, a place which is, let's say, 50% vacant, so therefore I can get a great deal on the place because it's like vacant, and then you come in there and you turn them into short-term rentals, then I mean that's the play. That's the play. That's why I'm saying when I'm going to buy something, I'm looking for some vacancy, and so therefore, if something has vacancy, I should be able to get a better deal on that.
Awesome. And what would you do differently if you had to start from scratch?
What would I do differently? It was so much. I guess I had a lot of kind of trial and error kind of getting into this property. Um, if I had to, I got to think about that for a second. If I had to start from scratch, what would I do differently? In the past, when I was in businesses, what hurts you in business is getting over leveraged. When you have a lot of debt and and you got to pay those those payments, it hurts your bottom line. You're usually paying higher interest rates. So, from my learning, from what my experience has taught me, don't get over leveraged. Debt is good, and debt can definitely be a good thing, and it gives you buying power, and it gives you scalability. You only have to come in with less. You can make good cash on cash returns, but that's a slippery slope. You can always kind of get too much in over your head, and you get over leveraged, and that's when people get in trouble. Anybody who in business in general, if you look at big business, small business, real estate, whatever it is, people who operate on too much debt typically get in trouble.
Okay, so staying away from over leveraging yourself is something that you would do differently.
Yeah. Because when I was in New York running my businesses, I definitely had some leveraging issues, which I kind of worked through, learned through, but there was definitely those issues there. Yeah. So okay. I wouldn't be over levered.
Okay. And then what about for the short-term rental side?
I think I'm not saying everything I did was great, but I think the steps I took, I'd probably take the same approach. If I buy another apartment complex with tenants in there, as the leases come up, I would, obviously terminate the leases, and then little by little grow it slowly, grow it slowly, and turn those long-term rents or long-term leases into short-term plays.
Awesome. And where do you see short-term rentals going in the future?
I think it's going to change the whole game of living and housing. Kind of like, see what Airbnb has done and Uber has done. They've taken the transaction out of the deal. So it's not like I got to give somebody money. And let's say I was just sitting here in an apartment complex, had a desk set up outside. Okay, you want to stay here? Let me, give me $100 and then go walk inside. It takes out that uncomfortability of kind of the transaction between people. Everything's kind of handled, taken care of on the platform. So I think in the future, people may not even need to sign leases. People might just live straight on Airbnbs. It's going to change everything. It's in the process of changing things. We're only kind of 10 years into this game, and look at how much progress has been made. So I think the future is wide open, and I think it could just literally change housing habits and shelter habits of people.
Awesome. And what question maybe do you have for someone that is maybe at that next level or doing something maybe a little bit differently than you? What question would you have for that host? My business is not fully automated. My business is semi-automated. You kind of got to think about the automation all the time. So I would definitely, and there's definitely hosts who have obviously many more units than I do, who have automated their businesses and done really well with them. So, my main question lies within the automation aspect and kind of how to get the business fully automated that you can take yourself out. Okay, great. And do you have any books that you recommend? Do you have anything that you listen to or follow that you would recommend to someone that is maybe getting into the space?
Think and Grow Rich. I'm reading that right now. Napoleon Hill. I think that's a pretty famous one. Mastery by Robert Greene, The Laws of Human Nature by Robert Greene, Marcus Aurelius, the Meditations of Marcus Aurelius, which is a great book on stoicism and just being not letting things affect you that much, and just focusing on what you can control, and then things that are out of your control, don't even waste too much time on it. there's so many books, man. I'll show
I,
you
I,
my
lo-
list.
I love it though. I love it because a lot of the stuff that you're talking about, and I really love that about you, Anuj, is that throughout this, it's always going to come back to character and how you treat people, and how you present yourself. I think that's says a lot about you. The books that you're saying would help you in this business are maybe not those optimization, real estate, the number crunching, because obviously you have a lot of experience with that. But you're saying it goes back to the person, how your character is, how you present yourself, how you treat other people.
And how you are as a person, exactly what you said. It's all about your character. People are only going to deal with you in the long run if you're a person of character. If you are your word, if you say, if people know that this guy said something and I know it's going to happen, or I know he's going to stay true to it, then you're going to solve a lot of problems in your life.
Awesome. Well, thank you so much, Anuj, for taking the time to educate us and share your wealth of experience and knowledge. I just think that it is so cool. I love what you're doing. I wish you the best of success, and thank you again. And until next time, Host Nation, keep on hosting. Hope you hosts benefited from the show. If you found value, please go on over to iTunes, leave us a review, and let us know what you enjoy about the show. If you'd like to talk to hosts that have been featured in these episodes as well as the community, go on over to our Facebook group, The Host Nation.